What's up, everyone? Welcome back to my channel. Today we're going to do a deep dive on an interesting topic. Can you become rich if the SEC approves a Bitcoin exchange-traded fund, or Bitcoin ETF for short? This is a question on a lot of people's minds right now. Bitcoin has been on an incredible bull run lately, breaking through all-time high after all-time high. And there's speculation that the SEC could approve the first ever Bitcoin ETF in the near future. So what exactly is a Bitcoin ETF? An ETF or exchange-traded fund allows people to invest in an asset like Bitcoin without having to actually buy and hold the asset itself. The ETF owns the underlying asset, in this case Bitcoin, and you simply buy shares of the ETF. ETFs trade on stock exchanges just like regular stocks. So if a Bitcoin ETF is approved, you'll be able to buy and sell it right alongside your other investments. No need to deal with cryptocurrency exchanges or Bitcoin wallets. The advantage of an ETF is that it opens up Bitcoin investing to a much wider audience. Right now, buying Bitcoin directly can be a big hassle for the average investor. You have to create accounts on crypto exchanges, learn how to securely store your coins, deal with the volatility. It's a lot. An ETF takes all that complexity out of the equation. Investing in Bitcoin becomes as easy as clicking a few buttons on your online brokerage account. Just like buying an ETF that tracks the S&P 500 or gold. This ease of investing is why many experts think a Bitcoin ETF would allow a massive amount of new money to flow into Bitcoin. We're talking billions of institutional investment dollars from hedge funds, pensions, endowments, and more. Not to mention all the retail investors who want Bitcoin exposure in their portfolios but find direct Bitcoin buying too difficult or risky. An ETF solves these problems, so if a Bitcoin ETF unlocks this flood of new investments into Bitcoin, won't that shoot the price up drastically? The short answer is probably. Bitcoin has a fixed supply of only 21 million coins. More demand without more supply equals a higher price. Simple economics. We've already seen something similar happen with gold ETFs. Before 2004, it was hard for most investors to get exposure to the gold market. Then the first gold-backed ETF was launched. These gold ETFs made investing in gold easy. Tons of money poured in. And over the next 5 years, the price of gold more than tripled. Now a similar dynamic could play out with a Bitcoin ETF. More demand and more mainstream adoption could easily send Bitcoin's price much, much higher. And that brings us back to the central question. If you own shares of a Bitcoin ETF, if and when that happens, can you get rich? The answer is a resounding yes. Here are a few examples. Let's say you invest $10,000 into a Bitcoin ETF right now. If Bitcoin's price goes 5x in the coming years, which is very possible with an ETF, your investment would grow to $50,000. Turning 10 grand into 50 grand is a massive win no matter how you slice it. But maybe you're wondering if it's already too late to see those types of gains, with Bitcoin at all-time highs right now. Well, keep this perspective in mind. Bitcoin has already gained over 1,000,000% in the past decade. Even if you don't think it'll run like that again. Even just a fraction of those gains could make ETF investors very wealthy. Here's a more conservative example. Let's say you put $50,000 into a Bitcoin ETF today, and over the next 5 years, Bitcoin gains another 10x thanks to the ETF. That would turn your $50,000 into a whopping $500,000. Absolutely life-changing wealth from one simple investment. And remember, these types of explosive gains have happened before, even starting from much higher Bitcoin prices than today. After the 2017 peak around 20K, Bitcoin gained another 5x within 18 months. So even from today's prices, 10x gains are very achievable with the right catalysts like a Bitcoin ETF. Now, keep in mind nothing is guaranteed. Bitcoin is notoriously volatile, and you should be smart about position sizing if you decide to invest. Never bet the farm on any one trade. That said, a small to moderate Bitcoin ETF position as part of a diversified portfolio can make a lot of sense, and certainly has the potential to generate truly life-changing wealth if things break the right way. Alright, so that covers the bull case in a nutshell. But for the rest of this deep dive, I want to take an even closer look at the mechanics of how a Bitcoin ETF could realistically make investors rich. Because the devil is in the details on this topic. There are a few key factors to be aware of. Number 1. The flood of new institutional money. Like we discussed earlier, a Bitcoin ETF unlocks billions of dollars in potential investments from major players like pensions, endowments, hedge funds, and more. These are behemoth institutions with almost unlimited capital. For example, Harvard's endowment fund alone is worth over $50 billion. and most of them have mandates to find the best return opportunities for their investors. Yet they haven't been able to invest in Bitcoin due to regulatory constraints and access difficulties. An ETF solves both those problems at once and opens the floodgates of institutional money into Bitcoin's limited supply of 21 million coins. To put some numbers on this, Arcane Research estimates that once a Bitcoin ETF is approved, 2 to 5 billion could flow into it in a matter of weeks. And Eric Balchunas, Bloomberg's ETF analyst, predicts over $50 billion could pour into a Bitcoin ETF in its first year. That's up to $50 billion in new Bitcoin demand unleashed. Even split amongst multiple ETFs from competing providers, we're still talking about demand for hundreds of thousands of Bitcoins flooding the market. Number 2, increased retail interest. On top of unlocking institutional capital, a Bitcoin ETF also makes Bitcoin investing extremely simple for retail investors. Like we mentioned earlier, buying Bitcoin now involves dealing with complex exchanges, wallets, security procedures, etc. It's a big headache for the average Joe investor. An ETF fixes this by allowing people to gain Bitcoin exposure through their normal brokerage account. Every major brokerage like Fidelity, Vanguard, or Charles Schwab will likely offer a Bitcoin ETF if approved. This simplicity means retirees, parents, school teachers, basically anyone with a retirement or investment account can buy in with a few clicks. No crypto savviness required. That opens Bitcoin investing up to over 50 million additional US households and makes it easier for young investors to add Bitcoin to their portfolios as well. Taken together, the institutional and retail demand unleashed by a Bitcoin ETF is almost unfathomable. We're talking hundreds of billions in new money looking to buy in. Now, what will this massive influx of demand do to the Bitcoin price? It doesn't take a rocket scientist to know prices will likely soar. When tons of new money chases limited supply, there's only one possible outcome according to the laws of economics. Up. All right. Now the third key factor to understand is how the ETF structure accentuates price gains. Because shares of the ETF itself will trade at a premium proportional to Bitcoin's underlying price. Here's why. ETFs trade based on the net asset value of their holdings. In this case, each share is backed by Bitcoin itself. And due to management fees and other costs, the shares trade at a slight premium to the NAV, usually around 1% higher. This means if Bitcoin itself goes up, say 10%, the ETF shares could go up 11% or more. It has a leveraging effect. And here's the crazy part. This process repeats with each leg higher, causing exponential growth in the ETF value as Bitcoin rises. For example, let's say Bitcoin goes from $10,000 to $20,000, doubling in price. The ETF shares might go from $10,100 to $22,000, more than doubling due to the premiums compounding. If Bitcoin then went from $20,000 to $40,000, the ETF shares could go from $22,000 to $44,400, again, more than doubling. This compounding effect is extremely powerful, and it means ETF shares will almost certainly vastly outperform Bitcoin on a percentage basis, turning great returns into truly staggering returns. Okay, this brings us to the fourth factor that can turbocharge gains: leverage. Because many Bitcoin ETF applications include leverage as part of their structure. For example, the Valkyrie Bitcoin Trust ETF plans to offer up to 200% leverage, meaning if Bitcoin gains 10%, the ETF could gain 30%. So not only do the share premiums compound gains, using leverage multiples the underlying gains significantly. Taking this all together, you can see how a Bitcoin ETF combines multiple layers of explosive growth. Billions in new demand flooding into limited supply. This drives underlying Bitcoin prices drastically higher. ETF premiums compound the growth even more. Potential leverage multiplies the returns further. It's almost the perfect storm for generating utterly staggering profits. Even moderate exposure could turn into ridiculous gains. Now, the fifth and final factor that could supercharge ETF returns is the power of volatility. Bitcoin is notorious for its wild price swings both up and down. Well, when prices are surging, volatility accelerates those gains even more. But volatility goes both ways, right? The key is that volatility disproportionately amplifies upward moves more than downward moves. Here's a simple example to illustrate. Let's say Bitcoin goes from $10,000 to $20,000, doubling your money. Then it drops back down to $10,000. You're back where you started. Now let's say instead it goes from $10,000 to $40,000, 4x your money, but then drops back to $10,000. See how the gain was multiplied more than the loss? That's the asymmetry of volatility. and it creates positively skewed returns for investors with long-time horizons. This is why Bitcoin has managed to return over 1,000,000% over the past decade, despite several 70–80% drawdowns. The upside rockets higher while the downside is more contained. Okay, putting this all together, a Bitcoin ETF unlocks a flood of new demand into limited supply, pushing prices higher, which is compounded by ETF premiums. Potential leverage amplifies the gains even more. Volatility turbocharges the entire process. So in summary, yes, getting approved before a Bitcoin ETF could potentially make you very rich due to these dynamics. Now, of course, nothing is guaranteed. There are also risks and potential downsides to consider. For one, Bitcoin itself may fail for unforeseen reasons. If it goes to zero, so does your ETF investment. The SEC may also delay approving an ETF for longer than expected. There could be competing ETFs that spread out the inflows across multiple providers, or the inflows may not be as large as predicted. Regulatory risks, security failures, exchange hacks. Bitcoin faces no shortage of existential threats, so investing any amount requires courage and conviction in the face of uncertainty. And declining Bitcoin prices after you invest could obviously cause large losses, especially if using leverage. Always invest responsibly. But despite the risks, the upside potential remains extremely appealing. History has shown that disruptive technologies like the internet or smartphones can turn early investors into the mega-rich. Bitcoin and its underlying blockchain technology appear to have similar world-changing potential, and an ETF may be the catalyst that propels Bitcoin firmly into the mainstream, creating enormous wealth in the process. So if you ask me, getting positioned before an ETF gets approved seems like a savvy speculative play for investors with conviction and patience. Just don't bet the farm and be ready for some roller coaster volatility. As long as your position sizing is reasonable, Bitcoin ETFs could potentially generate life-altering wealth over the coming years. Alright, that's my deep dive on how Bitcoin ETFs could make investors rich. Please like, subscribe, and drop me a comment with your thoughts below. I love hearing feedback from you all. See you next time.